Okay, let's talk about Bitcoin. Because right now, the market is on a knife's edge. Prices are swinging like crazy, there's a lot of fear in the air, and some of the biggest players on the planet are making moves that have everyone asking one very critical question.
And this is it, isn't it? The multi-billion-dollar question that's on every single investor's mind. Are we just looking at a healthy correction, or is this the beginning of a real crash? Well, the answer might start with a single massive transaction that just sent shockwaves through the entire crypto space.
Take a look at that number, $192 million. A transfer this big is never just random noise. Nope, it's the signal. So the big question is, who sent it? And what on earth does it mean for the price of Bitcoin?
Well, it turns out the transfer came from one of the heaviest hitters in all of finance, BlackRock. Look, when a giant like BlackRock moves this kind of money, the market doesn't just listen, it reacts. And it reacts fast. So what exactly did they do?
Here's the key detail, where the money went. Over 2,000 Bitcoin were moved directly to an exchange, in this case, Coinbase. Now, in the crypto world, that move usually means one thing and one thing only: somebody is getting ready to sell. And that one move immediately put the entire market on high alert.
But here's the thing, this wasn't just a one-off. It's actually part of a bigger and, frankly, a more worrying trend. We've seen 7 straight days of money flowing out of Bitcoin ETFs, adding up to over $250 million. This really points to a pattern of institutional selling that's been quietly building for weeks.
But it turns out BlackRock wasn't the only major player heading for the exits. Oh no. The sell-off is a much bigger story than just one company. You know, as one crypto pundit Martini put it, the selling pressure is coming from pretty much all directions. That $192 million transfer we just talked about? Turns out, that was just the tip of the iceberg. The total amount that was allegedly sold is absolutely staggering.
$3.5 billion. That's the total amount allegedly dumped in a single day. A number that big can flip the entire market's mood from bullish to bearish in just a matter of hours.
And the list of alleged sellers? It reads like a who's who of the crypto and finance industry. You've got exchanges like Binance and Coinbase, huge market makers like Wintermute, and another financial giant, Fidelity. When all of these guys appear to be selling at the exact same time, well, it's pretty hard not to be concerned.
So, what was the actual impact of all this selling? Well, for everyday traders, it was a weekend of pure chaos and financial pain, a true price whiplash.
Man, this weekend was just a brutal roller coaster. On Sunday, the price suddenly surged, totally wiping out over $100 million from traders who were betting against it. But just as the bulls started to celebrate, bam, the floor fell out on Monday. The price crashed, erasing every single one of those gains and liquidating another $40 million from people who thought the rally would keep going. It was a perfect and absolutely vicious trap.
So with all of this negative pressure and all this chaos, you'd think the outlook is totally bleak, right? Well, not so fast. Some analysts are looking at this exact same data and they're seeing something completely different. Could all this selling actually be a sign that the bottom is close?
One analyst, Kevin Capital, is suggesting that if you just ignore the panic for a second and focus purely on the data, a totally different picture starts to emerge. He actually believes Bitcoin is getting ready to bottom out, and to understand why, you kind of have to look at the broader market.
If you look at this year so far, Bitcoin has actually underperformed both the stock market and gold. Now, for analysts like Kevin Capital, that isn't a sign of weakness. To them, it's a sign that Bitcoin is oversold and is maybe, just maybe, due for a major comeback.
And there's another really key piece of evidence for the bulls. According to another analyst, Ted Pillows, the long-term holders, the so-called diamond hands of Bitcoin, they've stopped selling for the first time in months. And historically, that is a really strong signal that the smartest money in the market thinks the price has finally found its floor.
So where does all this leave us? It's like a massive tug of war. On one side, you have huge institutional selling pressure trying to pull the price down. But on the other side, you have the on-chain data suggesting that long-term holders are digging in their heels, getting ready for a rally. So is this just a brutal but necessary market correction, or is it the beginning of something much worse? Right now, the battle lines are drawn.